How do we know if the market is going up or down? Is it a good time to be a buyer or a seller? Welcome to this module where I'm going to take you through how to read market trends and do analysis on 5 key indicators that'll tell you whether it's a good time or a bad time to be an investor. I educate people to reach financial freedom through property through cash flow positive investments, specializing in the low income multi-let residential market. Supply and demand is a principle in any successful business. Whenever you have ample demand and minimal supply, you've got a recipe for success. Think about it. If there is only 10 Nike Jordan shoes available, but there's 100 potential buyers, it's good for the person selling those 10 shoes because they could probably sell it at whatever price they want because the demand is so high. There's 100 buyers for the supply of 10 shoes. The same principle applies in property. And the reason why I've chosen to invest in the lower income space in South Africa is because there is massive demand for tenants. 75% of South Africans rent at under 7,000 Rand per month, meaning that everything under 7,000 is where the demand is. That's where the majority of your clients are going to sit. Now, if you invest rather in the suburbs, which I don't really recommend, you're playing for capital growth. Now, the issue with the suburbs or the affluent market is that there's a lot of developers coming into that market, pumping stock into the economy. So if you look at an example like Fourways, which is in the north of Johannesburg and is considered a relatively affluent area, when I first bought there 10 years ago, my assumption was that I was going to get 10% capital growth year on year. That's what the agent sold me, and that's what I essentially assumed. But in 10 years, I barely got 10% in total growth, i.e. 1% per year. And the reason is not because I bought the wrong building or in the wrong area, but because there were so many developers coming in and pushing more and more stock. Now, when you've got thousands of new builds, why would a seller come and buy my unit, which is a couple years old, when they can have their pick at any of the new builds that have just been constructed? So you've got to make sure that you understand the supply and demand demographics, not only within the country that you've chosen to invest in, but in the specific area and the market segment. Now, my rationale for investing in the low income space is because the demand for tenants is so high. Now, I like to use TPN's data to be able to assess where the market conditions are. Here you can see the rental market strength index nationally from 2016 up until Q4 of 2020. So the red line is showing you the supply rating, so whether there is more or less supply in the market, and the green is showing the demand rating. So if we look here in 2016, early 2016, there was tremendous demand. There was a lot of need for housing and the supply was low. So you can see the market strength, which is the gray bar chart, was in an over demand situation, meaning it was a good time to be a developer or an investor buying property because there was a large demand for it. And then we see between mid 2018 and sort of 2020 that it was quite stagnant and that we had reached almost a market equilibrium. And now into 2022, we're going back into that same situation from 2016 where there is more demand than supply. This is a good indicator if you're looking at the property landscape in South Africa because you want more demand than supply to have a successful business. The next indicator is rental escalations. Now, oftentimes, rental escalation will try and keep up with GDP or at least to beat inflation, but that's not always the case. If you're in an area like we're currently sitting in South Africa, where the inflation rate is incredibly high, sitting at 7%, plus we have all of these other factors, high energy costs because of load shedding and petrol going through the roof because of the war in Ukraine and Russia and food prices going up, you can't really go to your tenants and say, I'm going to escalate rent at above inflation. I'm going to give you 9 or 10% escalation because your tenant is already struggling to meet all of their other increases. So we're in a tough situation now as landlords here in South Africa in the beginning of 2023 because inflation is high, interest rates are raising, and we're not really able to escalate rentals. Now, in a normal situation, rental escalations is when you are escalating the rent at higher than CPI or higher than inflation, meaning over time you become more and more wealthy. So you need to understand what the rental escalation projections are for your property investment, because that's how you can calculate not only your return for today, but your return over the next 10, 15, 20 years. Now, as an example, I've pulled another TPN report where you're seeing showing data from 2018 through to 2022. And here we're comparing the rental escalation figures versus headline CPI or inflation. So the blue is showing you national escalations. So in early 2018, we were sitting at around 4%, which was equal to CPI at that time. We then didn't see much growth. And then in the mid of 2020, when COVID hit, obviously rental escalations went down because we were in lockdown, our GDP went down, and tenants were under severe pressure. And landlords rather wanted to have tenants at the same rates than escalate and have an empty unit. So we saw minimal growth during those COVID months of lockdown. And then you can see there's been a steady increase upwards. The issue is that inflation has also increased tremendously. So as mentioned, our inflation rate in South Africa is hovering around the 7%, which is not ideal. Our Reserve Bank prefers a rate between 3 and 6%. And as soon as inflation is above 6%, they will continue increasing interest rates until inflation has been cooled. So we're seeing a bit of a rebound and a bit of a improvement in the escalation rates, but it's still nowhere near where it needs to be, which is above inflation. So it's important that you're reading this data so that you can put your projections into your numbers to see what your long-term return will be. The next one is really important, especially for the market that I target, the lower income segment. Your good standing ratio is an indicator of how likely your property is going to attract delinquent tenants based on the demographics of the area. So if I look at an area like Hillbrow, Joburg, CBD, which is considered a very high risk area, you probably have a good standing ratio of about 50 to 55%, meaning that 50 to 55% of the time tenants pay on time or pay within a grace period. The remaining 40 to 45% won't pay or will pay very late or make a partial payment. So your good standing ratio is an indicator as to how good your tenants are going to be at meeting their obligation to pay your rent. At a national level, South Africa is sitting and hovering between 80 and 85%. So anything that has a national average is probably an area that's worthwhile investigating and looking into. And it all depends on your risk appetite. I don't mind investing in Hillbrow, even though the good standing ratio is sometimes really tough, because I know that the yield is really good and I have an effective system of evicting and vetting tenants. So I feel comfortable and strong knowing I can win in that market. But understanding the good standing ratio and your risk of delinquent behavior is the third key element to understanding the market. So here I've pulled the TPN report for the good standing ratio per province. So you can see the province legend at the bottom. Western Cape is in the light blue, Eastern Cape in orange, Gauteng in dark blue, and KZN in green, and then the national average, which is shown in the gray bar. So if we look, obviously everybody had the same kind of situation here. All the provinces kind of collapsed during COVID because GDP went down and lockdown was a thing. So this is just kind of expected, and all of them have rebound to pre-COVID levels, which is great to see. Our top performing province is Western Cape, which is not surprising. Western Cape does have more affluent suburbs and more affluent employed people, so your good standing ratio tends to follow where the economic strengths of your country are. Then we have Eastern Cape, which is sitting at 84%. That's quite surprising for me because I wouldn't call Eastern Cape one of our top performing economically performing provinces. And then we've got Gauteng, which is sitting at 81.18. It is under the national average. Look, Gauteng is your economic hub. It is where the majority of South Africans live. So you're probably expecting to see a little bit more delinquent behavior. And then KZN, unfortunately, is the underperformer and has been for several years, sitting at 76.3%. So when you're looking at this data, you can now assess what your risk profile is in each one of these provinces. For example, Western Cape would have a very low delinquency risk. So when I'm running my numbers, I would put a smaller vacancy provision in place because I'm not expecting the property to be one, empty, or to have really delinquent tenants who aren't paying. Versus KZN, I'd have a much more aggressive vacancy provision in place because I know that the vacancy rate is high, but there's also a higher risk of tenants not being in good standing. Next, we've got vacancy rates, which is showing you the proportion of empty units in a specific market. So low vacancies suggests that you've got high demand and potentially very strong and competitive rental market, and high vacancies has the opposite. It's probably not a favorable market to be investing in. So here we've got data from 2016 all the way through to 2022. So you can see, some stability here up to the point when COVID hit. And again, you'll see this trend time and time again. As soon as COVID hit, our vacancy rate peaked at 13.31%, meaning 13% of the properties were empty at that stage. We've seen a nice recovery, and it's come back down to sort of your pre-COVID or pre-pandemic levels. So your national vacancy in 2021 for the fourth quarter was 11.71, and we've seen a nice recovery in 2022 of 8.13%. And finally, we have capital growth, which refers to the increase in the value of property over time. Now, monitoring this trend is incredibly important because you can determine whether there's appreciation or depreciation expected. Now, property is an appreciating asset class. For the most part, it always appreciates, but you've got a difference between appreciating and appreciating in real terms. So if you have an inflation rate of 7%, as we have now in South Africa, you need to have an appreciation rate above 7% to have any real growth. If you have 9% capital growth and 7% inflation, your real growth is the difference between the two being 2%. Whereas if you have capital growth of 5%, but inflation of 7%, yes, you're still appreciating. It's better than buying a car, which depreciates, but it's not growing in real terms. So effectively, your wealth is not getting any bigger. So here I've got data from Lightstone. That's the tool that I use to be able to assess what the capital trends are going to be in the different areas. Here we've got Gauteng, KZN, and Western Cape, and we're looking over a 5-year period from 2016 all the way through to 2021. So you can see in Gauteng that in 2016, your average price per transaction was sitting just under R1 million, and now it's at 1.2. So there's been a 200,000 Rand growth over the 6 years. That's a 20% growth over 6 years, which is not really that great. Then we have KZN. It was doing all right in 2016, and then it had a big slump in 2017. That's quite interesting. I'd like to know why. And then it's had some steady growth, and it's now peaking at just over 1.2 million. So it's similar kind of trend and appreciation stats as Gauteng. And then we have Western Cape, which is the outperformer by far. With regards to any province in South Africa, Western Cape is the shining star. So in 2016, it was hovering at 1.2 million. And in 2021, it was just under 1.8 million. So by analyzing these trends, you can see which provinces have a better chance of capital growth. Now, the reason why my strategy and the way I've structured my portfolio is very specific. I do cash flow, low-income housing in Gauteng because the demand is phenomenal. Plus, the purchase prices haven't escalated that much, so the rent is able to cover all those costs and leave me some profit in the bank. Whereas in Cape Town, I've bought my new build and my affluent strategy because there I'm playing for the equity long game. So I'm using Gauteng as my cash flow mechanism where I'm finding properties that have got good rental yields, and then I'm buying into Cape Town and Western Province properties because I'm holding those for the equity gain. Investing and speculating are two different things. Speculating is guesswork, hope and prayer, and listening to rumors about where to put your money. Investing is using data-driven tools, reading trends, and getting yourself educated so that you can make the system work for you. I hope you enjoyed this video. Give it a thumbs up and don't forget to subscribe. Property investing can be scary, and sometimes it's nice to have an experienced, seasoned investor look over your deals. That's why I've created my property coaching program, where I sit with you on a one-to-one basis and help you through the process of buying your first investment property. If this sounds interesting, book a free 15-minute call with me and we'll see if it's the right fit.